I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market. Today, soybeans firmed up a little bit. Traders are still hesitant to really step in, but the market really stopped its downturn. It actually opened and popped up pretty good, but the market started to still get soft as we got later in the day. There has been no real commercial buying yet, and so that has some traders a little bit worries about this bearish cloud that's been sitting over the market, and especially we have the USDA acreage report coming up, and you know, there is some concern that if they add some of the acres to the soybean crop, that will weigh heavily on this market. Now, with all that being said, we've got to watch out, because if these trade tensions actually start to cool and maybe adverse weather steps in, we could see an awfully big spike up and a massive short covering. Now, a short covering, I mean, but you have to imagine that with the market being down for, you know, almost a straight 5 weeks, that there should be some kind of significant rebound. We just don't see it yet, but if there is, there's always that possibility. We're in oversold conditions to an area that we don't usually get to, and not certainly at this time of the season. So we're going to watch that closely. Corn was also steady today. That hot weather is kind of underpinning the futures and holding it, keeping it afloat. It's kind of moving sideways and consolidating a little bit, but this triple-digit temperatures in the Corn Belt could really gain some traction, and there's been some too much rain in some other areas that's triggering some flooding problems. So there's a few issues with the corn crop right now, and that's really what we're watching for. But still, all these trade tensions have just been sitting on the market completely. Even in wheat was rising somewhat, and it took off right off the open, maybe up 8 or 9 cents, right along with soybeans, right out of the box. But then the market started to cool down a little bit. It still ended up a little bit. The bargain buying really stepped in, because this is a 5-month lows that we got to yesterday, and I think some bargain hunters stepped in and said, you know, enough is enough here. But the Southwest Plains are still suffering 100 plus temperatures, and if those troubles in the U.S. really stay in that area, and that's coupled with the high world stocks, as well as, you know, the bearish trend in Chicago, Kansas City, and in Minneapolis wheat, that really could keep these prices kind of low. At the same time, all of the grains are so oversold, and the fatigue has set in, that if this market were to turn around, you would think that it has room to really slingshot back. That being said, the uncertainty has really hurt the market a lot, and it's kept a lot of the non-commercial traders at bay right now. So there's still a lot of volatility expected ahead, but we're going to watch closely and really looking for that USDA report coming on Friday. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.